Good evening, or good afternoon, depending on where you're at. But yeah, I'm Ira Epstein, and this is Thursday, and we are now at the 4th of February, 2021. Time just getting on to 5:30 a.m. If you're watching in the U.S. shows like C-SPAN, where we see what the Senate is doing in the House, there's cameras and we get to see what's going on there. They are having votes galore. They might be voting all night long on a whole bunch of things going on for the COVID relief bill, the budget. What are they going to do? They're trying to figure out, do they censure some in the House? The Miss Green, a Republican. There's a lot going on. The battleground's still very real between how are we going to get a COVID relief bill done when the Republicans don't want to go for the numbers that President Biden has said. The president is not backing off his $1,400 check for those in need. Now, he might whittle down what does those in need mean, but he's going ahead. He considers it a campaign promise. He doesn't intend to be in office, he said, not me, just a short period of time, and he's already broken one of his promises or can't deliver on it. That isn't going to happen. So understand the man, understand the politics, and I think you understand that that is one line in the sand. Tomorrow's a big day. What are we getting tomorrow? We get the all-important jobs data. So what is it going to show? We saw December have a bad number. Now, the early whisper number is, of course, you see that, 50,000, but I am hearing some talk 75, 100,000 gain. Now, that is going to help the dollar if it comes in that way. And the dollar's been the enemy of the gold market. I don't know about the silver. I think that the silver market got beaten up real bad because it went up so high on the nonsense of the Reddit talk and right back down. You know, the commodity world is not the stock world, my friends. Whole different world here because margins change the game within, literally, intraday if a firm wants to do it. So they don't have to wait for the close of business. So they can take a margin in silver from $10,000 to $20,000 instantly. They program it in the computer. The game has changed. They send out a notice if they want. And margins are subject to change without notice in just about every firm. And what will happen is on the close, when the markets tally that night, if you don't have the right margin, you have to meet it. If the market's going your way, it doesn't matter if you got a big position going your way, but you still might have to meet it. Depends if you have enough money in your account. So got to watch that. That's different than the stock market where they haven't changed margin requirements since what, 1974? Also, for all these Reddit and other social media, you've been put on notice. Everything from the SEC, the CFTC, every government agency is looking to see, are you in any manner manipulating the market? That's a big, broad word that I'm not going to fall into that hole. I'm not saying you are. Let me understand that. I think everybody has the right of free speech. But if the pros are joining with you, watch out. Big problems for them. All right, so in the S&P, ta-da, new all-time high close. If the market were to end like this, would you believe with all the noise from last week through Monday that you'd be up 4% for the week at a new all-time high close? Some of you would, others of you got to be scratching your head. When you take a look at the chart, this is a vertical price rise. They're sons of a gun to catch. Why? You had a vertical decline off the GME, the AMC, the costs and all that. And now you've come right back up as though it didn't exist. Remember what I told you yesterday? I said eliminate that noise and you really had a sideways market. And the question was which way an eventual breakout. I view that as the noise of that phenomena that took place. And it's a phenomena that's not going away. They're laying quiet now. I don't expect that to always be the case. Are we trending? The answer is no. You're going to say, Ira, how could we not be trending? We're at an all-time high. You're not trending if you believe in what I do, that in order to have on a daily chart, and we're talking daily here, weekly, you're trending. And for those of you that get my weekly subscriber video on Saturday, you're going to be smiling all the way because I've been telling you something and you tell me what it said. I'm not going to tell all of you that aren't my paying subscribers. Worked out. So we're looking at the noise here. But remember, this makes up the daily charts. And this was a vertical decline, a vertical rise back. You've got a higher high and lower low Wow. Going almost from where you were down and right back in a matter of how many days? A week and a half? Not even that? Wow. You're over the 18-day average, so we have the bias up. Where's the resistance? Right above the market. It's around the 38.93 area. So that's where I'm seeing the resistance, projected resistance, wherever you hit that Bollinger Band. And if you start going up from here, that number will climb a little bit. But that would be the resistance point I'm looking for. Momentum-wise, you are overbought. An overbought market in vertical moves to the upside and downside. It's almost like a pendulum. You swung too far that way, then you came back this way, and eventually what's going to happen is you're going to get like that with the volatility of these big moves coming out of the market. Think of it that way, and I think you'll be on the right side of understanding the momentum. Then we get to the NASDAQ. So I look at the NASDAQ now as a pattern of higher lows, higher highs. The market's trending again. It is overbought. I am looking for 13,714, the upper Bollinger Band. I would not want to see today's low of 13,345 taken out necessarily. It wouldn't do a lot of damage to the chart, but it wouldn't keep this pattern really nice. It could give me a higher, it could give me, in theory, lower highs, lower lows. Why? Well, let's just see. What's the high here? It's 13,584. We then come down to, and then did we get back up today over that? We did not. 568. Tonight we're not over it. So because you took out already Thursday's high, if you were to just let go to the downside, you could end up with lower highs and a lower low. So that's why I don't want to see that number taken out at this point in time. But I'm not keen on the market because it's overbought. If I don't get the setups I like, I don't trade. I don't make, let me put it the right grammar, I don't make trade recommendations to my traders. That because they're counting on me for that. I get letters throughout the day. Have we got anything? If we got anything? If I had it, I'd send it to you. I like the Dow. I think the Dow looks interesting. It is overbought. It too is in an uptrend. It's not as strong as the others because we're not at new all-time highs in the market, but it's alive until you take out 30,412. I had told traders this morning two things. We were here, and when we had opened, we were under this. I said, I think you're going to see some pros sell the market against the 18-day average and put a stop right over this high of 30,738. The market at that time when we were talking was in the neighborhood. It wasn't this much. It was $60, 15 points, 20 points is all the market was trading. It wasn't even that. It was maybe 10. And I said, and if they get over it, then they're going to turn bullish instantly because the higher low, higher high. And you weren't overbought. So that's the part. Unfortunately, now you're overbought. So am I going to tell new traders to come in? No, I don't want to see it back over there. If you see this market stall after the jobs report, I'd be very cautious because of the overbought condition. Okay? In the Russell, where'd you stop? Remember what we talk about? A breaking point? Now, a breaking point's not where you break from. It's when you pull the brakes back on your horse. You ever ride a horse? You pull back the rein. Okay, that's what I mean. You're just pulling back on it. And that's the resistance area, the first challenge of it. So in but, 4 sessions. 1, 2, 3, 4. You went from the lower Bollinger Band to the upper. Unusual as can be. You don't do that very often. This has been the first break in that, by the way, since back in November, in case you're interested. And you had one shot if you were bearish. Now, admittedly, this was, again, one of these vertical moves. I want to just show you. Vertical being, there's your GME and that whole phenomena taking place, right back up to it into that resistance of that number. Would I ever tell a trader to buy over a Bollinger Band? Let me assure you, I never will. Okay, don't recall that I've ever done it. If I did, shouldn't have. Will I knowingly? No, never. I have to be on that funny smoking stuff. In the VIX cash, by the way, POTS, have you looked at that ETF? You know, it should be rocking and rolling. We should look at that, by the way, in our other videos because all the cannabis companies are doing well again. Higher high, lower low. The resistance 25.14 to 60, but too oversold. And remember what I've said? You get into this area and this market's acting like, hey, it's a floor. You've got to do a lot of work to prove that you're going to go beyond that. Could it happen? Of course it could happen. Is there a trend at hand? There is not a trend at hand. This is a vertical price decline. In the T-bond market, do you want to be short against a Bollinger Band? Well, if you don't, the way I teach charting, you've got a bear trend, you went down to the band, you're supposed to take money off the table, drop your stop down, and tight stop. And if the market takes you out, it takes you out. You're oversold against that number. Now, do you want to give up any of that money going into the jobs data? I'll let you decide that. My theory is you do what you got to do. I know what I tell my subscribers. You're not a subscriber if you're watching this unless you're also with that, and then you know where we're at. In the 10-year note, well, lower highs, lower lows. I've been liking the short side of the market against that 18-day average, but do you honestly think I like to go through these reports, especially reports that everybody's gunning at? I can tell you ahead of time. No. In the dollar index, are we going to keep going? We talked the past 2 days. You could be going up to that 100-day average. You got your first leg of trying to get both numbers of the slow stochastic over the 80 level. Now let's go to yesterday, which is, it's so crazy. This is Wednesday's close right here. Here is Thursday's close. So on Thursday, the market did do that, and we're waiting for the opening, which is a little bit from now, for the Friday opening at night. My guess is the market's going to be stable and probably add another attempt. It's day 2 of getting that number. If you get 3 days in a row of both the red and the blue over 80, it's embedded. Then a whole new set of rules come in, and I'll talk about them if we get it. Eurocurrency, you're down to the 100-day average, the lower Bollinger Band. As far as I'm concerned, the easy money's over. Whatever's going to happen is going to happen. I would be telling traders, drop your stop, cut your positions. You'll say, what if it goes to 119? The money was made from here to there. It could. Drop your stops. Okay, the odds are strong. You're going to try to get back over that Bollinger Band. So you don't want to look back and say, I should have done that. You want to be left with very little of a position. In the British pound, today was very important. You made a run for the lower Bollinger Band. You missed it by 1 tick. I call that you hit the lower Bollinger Band. Did your reversal and closed actually higher. Why wouldn't you be coming out against that number? Now, there's other numbers in there. You don't get my window envelopes in these reports. They're there. But that was the play, to be short. And then, do I think the pros could have resold the market there? They could have, and then I think they're stopped out with the late day rally. So that's what I would think happened. I think the easy money was made. Maybe they gave it a little back as they might have sold it late in the day. That could have been the case. Bitcoin, you're at a point where be careful here. You don't have to get the last point to get to the Bollinger Band. You've had your nice run up. You had this huge break, another rally, and these were tradable, by the way. I hate the margins. I know our clearing firm, I think, was $60,000 on a contract. Not many people trading it, right? Ethereum's coming up. Is it this week? I know I'm attending a conference for it, and that's going to be interesting. 5 Ethereum coins are going to be there, each one. Today they're worth about $1,500 a piece, so a $75,000 contract. Assuming a $7,500 contract, rather. Let's assume that the exchange runs a margin of about 42, 43%. They do it in percentages. And if that's what they're going to do, that'd be about a $3,000 margin. That would make it a very popular contract. So we'll see what happens. But, I like to get chart action before you can start trading it. But as you can see, I think that all I'm saying, in an uptrend, I think the pros are peeling money off right here. Brent versus WTI Crude, the differential seems to find itself at home at the 275 level. You've got how many days over the upper Bollinger Band? 1, 2, 3. This is borrowed time. And for my money, I think you're going to slip back to the right. Don't know how deep on it. Too overbought to be a buyer and not embedded. Now come to the, that was the Brent. Now you get to the WTI, it's the same picture. You're not embedded, you're overbought. With today, you're 4 days over the upper Bollinger Band. Okay, you can go higher, but I wouldn't be betting on it. Again, if you're under the Bollinger Band, you're not getting me bearish under that. You're not getting me bullish over these. You can get me when you ride them and you have an embedded reading. Then under the band, I could become an aggressive buyer, making trade recommendations to my subscribers for it. But that's not very much of a break. So the reality is no, not right there. And in nat gas, have I not been prepping you? I think I've said it over and over. We're getting into this deep freeze. You don't want to be bearish on this when you got a deep freeze of a week coming for Chicago and then it's headed out the other way. You know, a couple of days into it, well, the market will have digested the news at some price. Right now, it's gotten back from support back to the point where I think the pros took some money off the table again. And as I said, each morning I start off my subscribers. At 5:40 in the morning, I start recording. I'm typically up 3:34 in the morning reading, writing around 4:30 in the morning, my newsletter, recording at 5:20 and giving you an idea what's going on in the markets, what I'm expecting. I'm going to talk the shorter term. I am not a day trader. Day trades can happen if you enter the market and your profit objectives hit in the same day. That's great. And they can happen if you're entering the market and you get stopped out with your loss. That can happen too. But by design, no. I am a swing trader. Swing trade's very different. You know, they can be anywhere from today for a week. A week in futures is a long time. With 90% leverage, it's not the stock market. It's really full of leverage. Stock market's 50%. And of course, longer term, yeah, I'm all over that because on Saturdays and during the week, I will update them from time to time. My Saturday subscriber video is just weeks charts. And that's where the longer term, like all these rallies that you're getting in the stock market, well, if you look at the weekly chart, they kept their bullishness all the way through them. So that's where it gets, I think, pretty interesting on those type of things. How do you get it? Well, as soon as I publish it, I put out a notice. Now, if you download our app, it's going to send you a push notification. Otherwise, an email is going to come to you that it's ready to view. You can go to our website or you can view it on one of our other apps. There'll be a scroll bar at the bottom so you can jump between all these different categories. And I'm doing about 40 charts or more per video. Each video averages anywhere from about 20 minutes to 25 minutes long. What does it do? Well, number one, it's not expensive, but it really gives a lot of trade ideas. It gives you the news. It's going to talk longer term and shorter term trades. But find out for yourself. Go to our website under the word research. All the info's there, and you can sign up if you want at that point as well. I'm Ira Epstein. I'll see you all tomorrow. Take care.